If you were to ask me, this upcoming week is going to be a big one for Tesla stock, as you're sitting right there at about your 200-day moving average. A break up or break down from here could have big implications for where Tesla stock is going next. Now, Tesla stock moves on two things. It moves on Tesla stock news, and it moves on what the broader markets do. If you have a really good day in the markets, Tesla tends to outperform. Vice versa, if you have a bad day, Tesla tends to do really bad. I'm sure a lot of you guys that have been invested in Tesla for a while, you know that. Now, this week is going to be no different. You have Fed speakers, and these Fed speakers are really going to confirm this rally that we have seen as of lately, or deny the rally. It's as simple as that. We have Fed Jerome Powell that speaks not once, but twice, not to mention a lot of other Fed speakers. We do have some economic data coming out as well, and some interesting things happening with Tesla options. So we're going to get into a bunch of things here in this video, as well as some earnings that could also affect Tesla. Why not throw that in here? Hit the like button. Subscribe to the channel if you have not done so already and you want to stay up to date with everything going on with Tesla stock and the broader markets each and every single day. Twice a day, we keep you informed, and after all, it is free 99. But remember, none of this is a recommendation, none of this is financial advice, or should be seen as if I know all, or have a crystal ball, or am your uncle, aunt, grandma, cousin. None of that, okay? I'm just some guy that has a passion for sharing information and helping people make more money. That's all. So let me know what you guys think down below in the comment section as well. The first thing that's pretty easy to see, and really why I think this week is going to be a big week for Tesla, it really comes down to this 200-day moving average. Historically, Tesla stock moves big around this 200-day moving average, to the upside and to the downside. Just take a look at the last time Tesla stock broke the 200-day moving average to the upside. Tesla, this was back in May, Tesla stock went from about $200 per share to about $300 per share. A rally of roughly 50% following a breakout above that 200-day moving average. Now look at the last time Tesla stock fell under its 200-day moving average. You were around $290 per share back here in September of 2022. You proceeded to fall about 65% down to your January 2023 lows. So the last two times we have seen a big break or rejection of the 200-day moving average, Tesla stock has had a huge move. Now, I think this week it's all about the Fed, and it's all about confirming this rally or not. I shared this in one of the last videos, but Fed Bostic said on Friday that he sees inflation falling back down to the 2% target in the second half of next year. This is a lot faster than your average projection from Fed members, which does not have inflation on your core PCE hitting 2% until 2026. So Fed Bostic is like 2 years ahead of where the Fed thinks inflation is ultimately going to reach 2%. Fed Bostic also said on Friday, which I thought this was so important that I sent out an alert in the private trading community. If you guys want to come join that, be a part of the action over there, link down below in the description of this video. But Fed Bostic said, quote, "We can't wait until we are at exactly 2% to start reducing rates. It has got to be before that. Keep in mind, core PCE is running at 3.7%. Headline PCE is at 3.4%. You're pretty dang close to breaking under 3% into the 2% range, and that's probably a big threshold in which you probably will start to see some big rate cuts. Fed Bostic is Fed Bostic. If you look at Wednesday, Fed Jerome Powell speaks at 10:15 a.m., and just a couple bearish statements could send bond yields going higher again. We have seen 10-year Treasury yields fall about 43 basis points, mostly within the last couple of days or so. It's been a very aggressive move downwards. You really haven't seen this sharp of a down move in Treasuries since about March of 2023, and that's when the banking crisis happened, and that's when people thought the Fed was going to cut rates because of that and totally shift their policy, in which that did not happen, and the Fed made it very clear they weren't going to do that. And then what did bond yields do? They stabilized and went higher. One wrong comment from Powell could send yields going higher again, and that's the biggest danger of this week. That's why when I say the Fed is going to confirm this rally or not, all the Fed really has to do to confirm this rally is just not say anything. But if the Fed wants to make bond yields go higher again, if they want to make stocks go lower, I don't think they do, but if they want to, if Fed Jerome Powell's just having a bad day or for whatever reason, all he has to do is just say one thing. I've showed you this chart before, but I think it's even more important now. It's the Russell 2000, your small cap companies. They have been destroyed over the past 2 years. You're really at the same levels of carnage as you've seen during the internet bubble, the global financial crisis, and now they're calling it the bond route or route. I mean, this says, hey, if you don't see a bounce in small caps, the markets are really unhealthy here. And that's exactly what we seen last week. Your Russell 2000 was the outperformer. The Russell 2000, I'm looking at IWM, which is the ETF for the Russell 2000, was trading close to your October 2022 lows. After the Fed, the Russell 2000 has taken off over 5.2% in literally 2 days. Now, you got rejected at your 50-day moving average on Friday, almost perfectly. If you fail to retake that 50-day moving average, you're going to see a down move for your Russell. You're probably going to see a down move for something like Tesla as well. You got to look at the Russell and you got to look at Tesla as like two peas in a pod. Why? When it comes to Fed policy, they're both interest rate sensitive. Tesla trades a little bit more like NASDAQ stocks, but Tesla, at the end of the day, is interest rate sensitive. So if IWM gets rejected here, and maybe the NASDAQ does not initially, it's a pretty safe assumption, in my personal opinion, that the markets are going to fall. Usually the Russell 2000 tells you something. That's why you want to be watching it. The Russell 2000 hasn't been doing well, for a long time. It was telling you were going to see some kind of pullback in the broader markets. And that's one of the reasons why I was so bearish, July, August, really towards the end of August, calling for a downturn in the markets. And we hit that right on the head. A lot of it was thanks to what you were seeing in the Russell 2000. As I'm sure you guys also know, because if you watch this channel, you've seen this chart before, but this is the average performance of markets after you reach correction territory. So this happened 2 Fridays ago. So the previous, week, right, you tend to be negative because you tend to hit that correction level. 1 week later, after you hit a correction, you tend to bounce about 1.5% over 65% of the time. 2 weeks later, 3 weeks later, and 1 month later, you tend to be red about 2%, 40% of the time you are positive. So 60% of the time you're negative. And we're heading into that 2-3 week period now. 3 months, 6 months, and 1 year later, you tend to have very good returns. Specifically, 1 year later, you tend to be higher by about 10.1%. And 80% of the time, you are in the green. You recently seen the Bank of America Bull and Bear Indicator. They've done this since 2002. It did go into extreme bear territory. Normally, when that happens, you do tend to see a bounce. But I would like to point out what you seen in 2023, that rally, it was really AI fueled. Really wasn't that bullish. Look at where it ended up going to. Look at 2021. You were in extreme bull territory, or at least close to that. In 2018, 2017 as well. You only got to like 4 out of 10 So you weren't even that bullish, and that's probably because you had like 7 stocks controlling the broad markets and everything else was still basically selling off and really has been for 2 years now. So if you see a bounce that continues and markets really embrace the Fed being done and rate cuts coming in 2024, you could see a much wider rally of our markets. I'm not exactly expecting your big tech stocks to lead the way higher this time around. You can see the Russell 2000, the over 5% rally we have seen in 2 days. Well, that's probably the sector you want to be in right now if you are tactically bullish. You want to bet on a broadening market. And I think that includes Tesla as well. As Tesla is interest rate sensitive, you do have UAW fears. You have things that are going on with Tesla specifically that really kept Tesla docile on Friday. I think Tesla would have been up 5 or 6% if it wasn't for those UAW fears. But I think this week, the markets are probably going to get over those UAW fears with Tesla because we haven't heard anything else. It doesn't look like Tesla is actually going to unionize anytime soon. It's one of those things. Probably my most famous quote as of right now. The markets can handle bad news. They cannot handle uncertainty. That goes for individual stocks as well. We have uncertainty about the UAW. If Tesla will unionize, they haven't. We didn't get any new news over this weekend. Well, probably means we're going to see a bounce and Tesla might actually catch up to the markets and the rally that you've seen on Friday. Don't be surprised if Tesla is up big time on Monday. Again, as long as the markets are also in the green. And if you look at this chart, I've also highlighted this here on the channel quite a few times, but your blue and your green lines, these are your small cap lines, are trading at almost record low valuations. You're trading at where you were during the Rona crash, as well as the 08-09 financial crisis. Whereas the S&P is trading at around historical normal kind of valuations that, we have seen over the past 20 years or so. But your small caps, your interest rate sensitive companies are just beaten down still. And then they're super, super cheap. And that's really where I want to be right now. And Tesla. FX Evolution has shared this chart on X. He says a new higher high has formed on the bullish percent index. Similar moves like this have generally been favorable for the recent lows to be the bottom. This just means the percentage of stocks that are actually moving higher. So normally when you do see this make a higher high, like you can see right here, you did hit a lower low. And now it looks like that higher high was breached. Since you did close at about 43, that higher high technically would have been anything above about 37, 38 or so. So this is a pretty good sign that you're getting broad participation in the markets. And that's what you want to see if you are a bull in our markets. It's as simple as that. What you have seen over the last 12 months or so has not exactly been a healthy market with just a handful of stocks having all of the gains. But you are heading into tax loss harvesting season. November is obviously the second largest month for tax loss harvesting with private clients. You tend to see over $1 billion of stocks that get sold. And then December is the biggest month. Obviously, I'm sure you guys could imagine that, with about $1.3 billion on average that tends to be sold by retail investors. The most recent AI investor sentiment as well is pretty dang bearish at 50.3% bearish, 25.4% neutral, and 24.3% bullish, and this was updated on November 1st, so just last week. People are still pretty dang bearish out there. Now, we did see something interesting with Tesla. On Friday, even though Tesla was in the green, it wasn't up nearly to the same extent as a lot of other stocks on the markets, especially an interest rate sensitive company like a Tesla should have been up a lot more than we were, based on such a dramatic fall in 10-year treasury yields. It's not only good for Tesla's valuation, right? Makes the valuation a little bit easier. Potentially, maybe you get multiple expansion, but it literally helps Tesla's business because 90% of Teslas, or just cars in general, are financed. So it's literally going to make it cheaper to finance a Tesla. Thus, Tesla should sell more Teslas. It's as simple as that. You did not see participation, broadly speaking, with Tesla. Again, that's because of the UAW. But under the surface, hedge funds and institutions were actually pretty dang bullish on Tesla. You had 900 orders totaling $1.48 billion with a positive order value of 67%. Over the past week, you have seen 4,680 orders totaling $12.37 billion with a positive order value of 37%. Now, I want to take a moment to acknowledge some of the individuals that comment on these videos when we go over Tesla options and they say, hey, a bunch of calls, a bunch of bullish positioning is not really bullish. That you actually want to see a bunch of bearish positioning, and that's bullish. That's not exactly true. It could be during, weird kind of times in our markets, but generally speaking, the more bullish positions you see, the better, because market makers, they're market makers for stock, options, different markets. They provide liquidity. They take the back end of options. So imagine it like this. If you had a really bearish day with option activity, there was a lot of bears out there. Well, if you've seen a lot of puts get bought, generally speaking, that means the market makers might have to short a lot of stock. Or if you've seen a lot of stock get shorted in Tesla in any given day, you would have to see the market makers buy a lot of puts to protect that. Vice versa. If you see a lot of people, buying stock and the market maker is selling them stock, then the market makers might have to, buy a lot of calls. So it's just showing you where the money is going in Tesla. That's as simple as that. And it's not this whole contrary thing that a lot of people believe. Again, sometimes it can be in unique situations, but generally speaking, bullish is bullish, bearish is bearish. So the overall 1 week total, 37% positive. It was a pretty bearish week for Tesla option activity. And again, a lot of that, I do believe, comes down to the UAW. Not that, rates coming down is negative for Tesla or anything like that, right? That's obviously not true. There's a lot of people that are pretty fearful of this UAW situation under the surface. Let's take a look at some of the option activity that we are seeing expiring by this Friday. And the expiration, or strike, I should say, with the most amount of open interest and volume is by far the 230 call. You've seen volume of about 12,497 on Friday. That's your open interest. Volume of 55,000. So there was a lot of people looking to get into some positions. The 240 call is pretty active. 18,000 for volume, about 10,000 for open interest. 250 call has about 15,000 for volume, or had 15,000 for volume on Friday, with about 8,700 for open interest. And your 220 call had about 45,000 for volume with 8,400 for open interest. The only put that's seeing really any substantial activity is that 180 put, and you did see about 53,000 contracts trade hands on Friday. That was your volume number, and your open interest sitting at about 7,000. But it definitely looks like the calls are winning out here. And the 225 call had 88,000 for volume on Friday, with open interest of about 6,000. Normally, when you see volume way higher than open interest, that tends to be a pretty good sign. People are getting into positions. We are going to have some earnings this week that could move Tesla, that could move certain sectors of our markets, but we're really through the thick of it when it comes to earnings season. We don't have any other big companies that will move the indexes higher or lower. Your Googles, your Amazons, your Teslas, your Apples, your Microsoft's, your Netflix is over. The last big earnings we have is Nvidia, and I believe that's not until like the 20th or something of November. So I don't even think it's next week. Maybe it's next week, but I think it's like later into November. So that's going to be another big earnings, but from now until then, earnings season is basically over with. Some of the companies that could affect a Tesla would be Rivian Tuesday. I'm pretty dang bullish on Rivian. I don't want to own Rivian because apples for apples, Tesla's way cheaper of a company. Tesla has FSD going for it. Tesla has a lot of different things going for Tesla, and apples for apples, Rivian's like 10 times more expensive because they're losing a crap ton of money. Rivian is just not a great place to put your money right now. But if we do go through a downturn in the markets, don't be surprised if you're in that trading community and you see me buy some Rivian, because I think it's probably one of the only other EV makers that will survive long term, just because it's, again, one of those unique products. When you see a Rivian, you're like, you know, that's a little bit different. It's a little bit more stand out-ish, but I mean, they're seeing good demand. That's great. That's going to be good news for Tesla, I'm sure, Tuesday and after hours. But the valuation perspective, I am not a fan at all. Now, Wednesday, pre-market, you're also going to have Fisker. I don't really think that's going to move the needle for Tesla, but Rivian could be an important one. Other than that, you don't really have anything else that will affect Tesla. You have NXP Monday and after hours. That one is really the semiconductor company that supplies a lot of chips for Apple and different components for Apple. I believe like their cameras and other things as well. So that could be one that drives the semiconductor sector itself. Uber Tuesday pre-markets. Again, Rivian Tuesday after hours. Upstart, Oxy, Wish, Wednesday pre-market, Roblox, Fisker, Warner Bros. Wednesday after hours, AMC, Walt Disney, Twilio, Affirm, Duolingo, and HubSpot. Thursday pre-market, you have Fiverr, you have Yeti, Tapestry. Thursday after hours, you have Plug Power, Unity, The Trade Desk, Win. Trade Desk could be an interesting one, especially in the software sector. And then Friday pre-market, you have just a bunch of random different companies. But there's only really a couple earnings that I'm even interested in seeing this week. Now, in terms of Tesla on the chart, again, your 200-day moving average, you're finding this as support right now. So that looks good on Friday. The UAW fears what's going on under the surface could have been enough to push Tesla under that 200-day moving average. Then you'd be in a lot worse spot heading into this upcoming week. But you are above the 200-day moving average by $1.02. Your 200-day moving average at $219.06. And Tesla stock's currently trading at $220.08. It's not a huge margin. You did retrace a lot from the peak that you seen on Friday, around $226. Again, that's because of the UAW comments, some of that fear, but it looks okay as of right now. The MACD is curling up. Your yellow line is about to breach above the blue line. That is overall short-term bullish. Your RSI is at 44.20. Normally, when you hit 30 on the RSI, you can bounce to a 70. And I think if there was any time to do it after 10-year treasury yields have fallen 43 basis points in the last couple of days, if the Fed does not reject this rally, if Fed Jerome Powell does not say anything that the markets hate, that scares the markets, Tesla stock, the markets are probably going higher from here. Again, like I said in the videos over this weekend, I'm tactically bullish on the markets right now. I'm not fundamentally bullish. I think stocks will come down at some point in 2024 to lower levels than we're seeing now. But from now until then, I do not want to be short in this market at all. Like, no freaking way. You would have to pay me to be short in this market. There is no money, in my opinion, in shorting this market unless some kind of out of the blue black swan just came along. And I'm not willing to make that bet. We have all of our catalysts out of the way. Right now, the Fed, that's really it. Do they confirm this rally or do they not? Now, I think something interesting with Tesla, and we might discuss this a little bit more in the video coming out later tonight around 9 p.m. If you guys are not subscribed to the channel, definitely subscribe. That video that comes out around 9 p.m. every single day is a good one to wrap up your day with. But if you do see the Fed confirm this rally and they're okay with the rally, they don't say anything too crazy, I think the markets are probably going to get over this UAW fear early next week. It's probably one of my most infamous sayings as of right now. I say it literally all the time. The markets can handle bad news. They cannot handle uncertainty. Same thing with Tesla, right? you've seen a couple days of uncertainty whether or not Tesla is going to strike, especially over in Europe. Fremont, there was some concerns as well. It doesn't look like we got any new information so far. So the uncertainty is starting to go away. We're starting to get a better idea of we're probably not going to see a strike or a unionization at Tesla. Tesla might actually rebound a lot. Tesla didn't participate all too much on Friday compared to what it should have done. Tesla should have closed at the high. Considering treasury yields fell so much, your Russell 2000 was up almost 3%. Tesla was up less than 1%. It was up like a half of 1%. You don't be surprised if you see a 5 or 6% green day on Monday for Tesla. That is certainly a possibility. So that is going to go ahead and do it for this video. Let me know what you guys think about all of this information. We will get into a little bit more of where I think Tesla could go this week on a bullish case, on a bearish case, depending on what the Fed does have to say in that video at 9 p.m. tonight. So make sure you guys are staying tuned to the channel for that one. Hit the like button and subscribe to the channel. In the meantime, it is free 99. It costs you nothing to do. As well as that, like I said, if you guys want to come join the trading community, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.